Hi, this is Kerry Artak with Wicked Stocks, bringing you an individual stock pick, actually an update in Amazon.com, incorporated symbol AMZN. This is a free video that has been recorded and created just for YouTube, but our subscriber base, I'm sure wickedstocks.com will also probably make good use of this video. I did record this video, by the way, on Wednesday, July 20th, 2022. Take a brief look at the fundamentals, courtesy of Yahoo Finance. If you want to freeze frame over that, you can. I'll be showing you weekly bar charts throughout. And as I mentioned, we've done a fair number of Amazon videos over the last 6 months or so. I think this is the third or fourth. The most recent was in June. I'm going to show a segment of that to sort of catch you up on our thinking with regard to what this was a premium video. All the Amazon videos have been premium for the last 6 months. This is an exception. Premium meaning we have wickedstocks.com membership. For $25 a month, you can get 2 stock picks a week. So keep in mind that the week you're viewing this YouTube, we've already put out 2 videos on Tesla and Stryker Corporation. This is the third one that goes out to YouTube. We do 1 free YouTube a week. We want to increase that number, just so you know. So please keep checking into Wicked Stocks YouTube channel for the free and pertinent stock pick information. Let's get on with the analysis. This is the zoom in for Amazon. We're going to be taking a look at that red square area as we open the chart up. Before I do that, I'm going to show you about a minute and 10 seconds if you want to take a look at the backtrack from June 9th. We put this video out. It's actually quite relevant to the analysis I'll be showing you afterward, and we sort of take off from there. I'll let you take a look at that, and we'll be back in just a minute. Reliable. And so this is where I like to use speed lines, because they are a trend defining tool that I've used for years, descending 1/3 and descending 2/3 speed lines. These are the highs, kind of a double top here, going back to July of last year, 188.65, almost a year ago, and then we had a November follow-up of 188.10. So I use the all-time high of 188.65. I draw a trend line from that high to the 1/3 pullback point against that recent low several weeks ago, in the time frame in which that low was actually made. And it comes in this week at 127.77. It's done a pretty good job so far of containing buying pressures for the week. Yes, I could have shot this video earlier in the week, but we've got, I can't give you excuses. Here we are. This is our buy signal, if settled above, into later Q3, into July and August. But below which we can quite easily, over the next few weeks, 2 to 3 weeks, 3 to 5 at the most, fall back to that 101.26 low area. With no surprise that we formed a low there. And so the same exact chart you can see, I'm going to recreate and show you the support area that did hold. We came off that speed line nicely. Within 2 weeks, we were testing that 101.79 to 102.52 area, which is the high area. That's a former shelf top consolidation zone that lasted for, the better part, actually about a year and a half. So the 101.79 to 102.52 area is meaningful floor of support. We've come off of it nicely. And in fact, as of this week, over the last few days, we've actually pushed through that descending 1/3 speed line that held beautifully about 2 months ago or so. Yeah, that week of June 9th. So here we are. It's dropping 130 a week. It's at 120 even the week of Monday, July 18th, dropping 130 a week. You can monitor the location of this speed line through time. It'll still be relevant all the way through August and into September as it continues to drop lower. If we settle above the descending 1/3 speed line, the descending 2/3 speed line becomes our objective. And I'll show that in a second. First, I want to just kind of remind you of how speed lines are constructed. I like to use them, especially in this situation where the market drops significantly in a relatively short period of time from that January high, using channel formations I don't think they're too steep. The line studies are too steep with regard to the channel formation. So I like to use the speed lines because they're a softer angle. And with speed line analysis, the softer the angle, generally the more reliable it is in terms of its indication as resistance and breakout resistance. In this situation, it is now breakout resistance. A month and a half, 2 months ago, it was resistance. That held beautifully, and we fell back. Now we're pushing through it. So the descending 1/3 speed line is created, that X marks the spot, really, the T there. That is the 1/3 pullback from the two extremes, the January high against the May low. And you actually project the trend line off that high from January in the time frame in which the low was made. And I think that's the point I'm making here. There's nothing rocket science about this. It is a very dynamic approach to trend identification because each time you put out a new low, so for instance, if we were to take that 101.26 low out in the weeks ahead, we would reconstruct the speed line. But until then, it remains sort of fixed in terms of dropping 1.3 a week, and is at 120 this week, and we are above it right now by a pretty comfortable margin. And so the question is, are we going to fall back and close the week Friday at or below 120 even? If we do, there is a susceptibility to falling back to that 101.79 to 102.52 area yet again over the next few weeks. But if we do close the week, and I think it looks likely, and I'll get to that in a moment too, because there's some triple Q NASDAQ 100 stuff going on that sort of affirms this buy signal. The week, we're Wednesday, we're halfway through it, so anything can happen between Wednesday and Friday's close, so I don't want to be too presumptuous. But if we settle the week, Friday, July 22nd, at 121.20 or higher, and that is a 1% push or 1% violation above the 120 even descending 1/3 speed line, we have ourselves a pretty valid buy signal. Now, if we close at 121 even, yes, it's still above 120 even, but I like the 1% violations as a means of determining reliability, if you will. So if we close at 121.20 or higher on Friday, July 22nd, we have a meaningful longer-term buy signal, longer-term by some people, probably near-term by others, in which over the next 2 to 3 months, I would anticipate the 2/3 speed line. So when you settle above a descending 1/3 speed line, your next objective becomes the descending 2/3 speed line, which is presently at 154.27 and dropping 65 cents a week. And once again, so long as that May 22 low holds at 101.26 and we do not retest it, that descending 2/3 speed line is a target that you can monitor through the rest of the year, dropping 65 cents a week. That's a nice gain. I'm just doing the math in my head. It's at least 20%, right? Yeah, I think it's at least a 20% move to the upside, and that would become our 2 to 3 month objective. On the way up, we have a 3/8 upside Fibonacci retracement right now at 134.64. I would call this a realistic 2 to 3 to 5 week target, assuming we close the week above 120 even by the 1% margin. 134.64 is a decent 2 to 3 to 5 week target. You could scope out some 135 out of the money calls that don't expire for at least, a couple of months. You could go shorter than that, but the risk, of course, is you've got the rapid time decay element as you approach your objective, and so you could be right on the move and wrong on the revenue, so to speak. So the 3/8 upside Fibonacci 134.64 is also in line with previous lows from earlier in the year. It is an area where we could top out for a month and perhaps fall back to that speed line that is presently at 120 even. But there's no clarity on that. Of course, there's every bit of chance that we could top out at 134.64 for a week, 2 or 3, back off modestly, and then close above it at the end of a week. And then we're just another 3 to 5 weeks away from reaching our objective at 154.27, where we can top out on a quarterly basis. And by that point, we could actually be saying through the balance of the year. And if we close above the 154.27 speed line, then our next objective becomes the actual high itself from January of this year, 188.65. Would become the next, I'd say 2 to 3, 3 to 5 month objective were we to settle above 154.27. And I'm way ahead of myself on that. This is the Triple Q, and I want to mention that I do a daily Triple Q report in wickedstocks.com. It's only $25 a month. The chart that you see here is part of that analysis, and the analysis in the Triple Q. And the NASDAQ 100 shows the same. Rising 2/3 speed line projected off that March 2020 low has been significant long-term support. I've been mentioning can contain quarterly, possibly annual selling pressures. And you can see that while we spiked below it about 5-6 weeks ago, we did not close below it on a weekly basis, and it has held beautifully over since that time. And now, as of this week, the Triple Q is pushing through the descending 1/3 speed line that it also has from its November high, 299.67. So you may make note here that if the Triple Q closes the week, Friday, July 22nd, above 299.67, you might throw in a 1% margin on that. That'd be 2.99 above that point. Then we have a valid buy signal, mid to longer term in scope. The next several months then expected to continue on up to that 354.11 descending 2/3 speed line. I will mention that I've been telling my wickedstocks.com subscribers who subscribe to the daily Triple Q report that holding above that 278.17 long-term floor of support, that rising 2/3 speed line maintains a realistic 3 to 5 month objective above the market at 354.11. It just so happens that if we close this week above 299.67, we should see a more consistent upside dynamic, and that 354.11 then likely inside of 2 to 3 months, where once again we can top out on a quarterly basis. Now, I don't want to go there, but if we do close below 278.17 at the end of any week, and that is rising at a particular rate, I'm not going to give that information right now, but if you want it, you should subscribe to the daily Triple Q report. It'll keep you tuned in to the NASDAQ 100. And, it's a great vehicle for trading, day trading, options trading, you name it. You probably already know this. I'm going to leave you with this image here, that in the event we fall back, actually, I don't know if I'll leave you with this image. I just want to remind you that if we close the week at or below 120 even, Friday, July 22nd, all bets are off, that this is just a spike through resistance, and that we are then susceptible to retesting the 101.79 to 102.52 long-term support area, which once again can contain quarterly selling pressures, possibly into later year. And if we close below 101.79 at the end of any week, we enter another phase of selling. That former congestive range that you can see on the far left of this chart, the bottom of that is 65.35, and I think that that would be in reach by the end of the year if we were to close any week below 101.79. But that is not what's happening. What's actually happening is we've tested 101.79, and we're now above the descending 1/3 speed line, and we should now, over the coming months, 2 to 3 months, reach into that 154.27 speed line resistance. And this is the image that I'm actually going to leave you with. And I appreciate you following this. Don't hesitate to go to wickedstocks.com, sign up. It's not a long-term commitment, month to month. If you don't like it after a month, you can bow out. But I think that the combination, if you do the whole package for $50 a month, you get the daily SPY report, the daily Triple Q report. You get 2 stock picks a week beyond what you're seeing right here. There's 2 others that went off this week, Tesla and Stryker. You get the weekly IWM, the weekly DIA, so forth and so on. It's a full package, well worth the money, in my humble opinion. And that's really all I've got for this particular Wicked Stocks video analysis for YouTube. We'll be back soon with another market analysis. You have a great day.